And we are officially live, broadcasting only on onedealaway.com every single morning at 7 a.m. Eastern Daylight Time. My name is Nev, this is Money Matters, and in today's episode, we are going to be talking a bit more about what's going on in businesses with Chapter 11s, right? Bankruptcies. Are they up? Are they down? What do you think? I think you're guessing they're up, but let's find out how up they actually are. Then we have a bit of a news as to there was an announcement that kind of came in from Fed Powell and what their plans are when it comes to kind of preparing for the future. We're also talking talking about the gentleman who is a CEO of Paychex, which is basically a payroll and HR company, as to what's going on in businesses to give us an insight of where we might be heading. We're going to look at some of the Federal Reserve charts to understand what's been going on and kind of where we are. We do have some information about what's going on with some of the businesses. We're going to dive a little bit deeper. And then we have news around the world when it comes to COVID and when it comes to the mask wearing and sort of how do different countries deal with that stuff. How do they deal with the COVID? So it should be a very, very interesting and incredibly important show. I do want to welcome everybody watching this live on onedealaway.com. Feel free to say hello. And as always, we're going to do Q&A at the end of the show. If you're watching this on YouTube, do me a favor, hit that subscribe button right now and the bell button to get notified. And of course, if you do like the show, do smash that like button. All right, y'all, let's do this. And good morning. Happy Wednesday to you. Hopefully you're doing excellent and you're excited about what goodness the day can bring. First off, I'd like to get started with the very important news about what's going on with the bankruptcies when it comes to business. And we do have a report that the Chapter 11 U.S. commercial bankruptcies are up 43% in June, and for the first half of 2020, Chapter 11 filings are up 26% versus same period last year. Now, the Chapter 11 bankruptcy is not a bankruptcy where they just shut the doors completely. This is just a restructuring type of bankruptcy. Commercial Chapter 11 filings are up 43% over June of last year. And for the first half, total commercial Chapter 11 filings are up 26%. They do go into some additional piece of, what they're saying. And they're saying, well, we're expecting that the companies are seeing bankruptcy protection while the markets are recovering and they're struggling with stuff. So they're not giving much more information than basically what we just read twice. But it is important. Now, one of the interesting pieces that I wasn't able to quite get is that the Wall Street was reporting that for July, the numbers are up 52%. So that's even scarier than what this particular article was able to show us. And I do highly encourage everybody to go in and check out that article. I don't make any money, lose any money if you do or don't. Just wanted to point it out that what was out there and available for you to check out. The other piece that the Wall Street also has announced is that the personal bankruptcies are up some 30 to 40% over last year. And I don't think that that's a surprise or a shock to anybody whatsoever. When it comes to the stimulus and a new package and what's going on there, well, nothing yet. They are still back and forth like a pack of dogs and cats fighting over different things, and no movement is happening. And do remember, if they don't reach anything by the 7th, well, they all go on vacation until September 8th. So we don't have much time. We really have 2 days, and they're nowhere near to what's going on. Now, my understanding is that Ms. Pelosi has announced that if they can't reach anything over the today and tomorrow, maybe Friday, that they might be asking them to come in during the break to kind of emergency session. So we'll see what's going to happen. Right now, there is no help, no assistance, no stimulus, no package, no anything coming any one of our ways. And unfortunately, there are many people that are suffering a great deal because of that extra $600 that is, well, missing in action and gone now. So that's the eviction and mortgage forbearance stuff is also gone. And there are many other challenges and problems that people all over the country are facing, whether they're landlords or renters, whether they own business or work in one, whether they need a job or looking to employ somebody. Everybody is struggling just in different ways, and there's no end in sight as of right now. Tomorrow we're going to be talking because every Thursday we do a real estate update. So tomorrow we're going to talk deeper about real estate and what's happening there right now, what can we expect, and kind of where we are. But today, let's go in and talk a bit more about business and what's happening. So as you've seen, there's a big uptick in the foreclosure, in the bankruptcies when it comes to business. One of the interesting components to understand is the news that is coming out of the Paycheck CEO, which basically is saying that the small business employment is starting to look like April yet again. So CEO Martin Mucci, or Mookie, I'm not quite sure how you pronounce this, told CNBC on Tuesday that small business employment is falling again. The July job index dropped. It puts us back to about April. Paycheck's IHS report July show a month-over-month drop of 0.24 and a decline of 3.6% from a year earlier. Index also dropped 3.65 from March to April and has fallen 0.04 through the past quarter. So down here, you can actually take a look at how they have divided. So you see this like western part of the country, then you have this like middle nordish, then you have a southeast and then east. And as you can see, the west has dropped tremendously, followed by northeast, then south, and then the Midwest is doing, it sounds like, the best out of everybody. Sorry about that. Let me adjust so that you can actually see what I'm talking about. The positives for the month included the rebound in the financial activities sector and in construction. So there you go. So the financial activities is what's picking up, which makes sense because if they're printing money, that money is going somewhere. That means the financial activities are picking up. And of course, the construction and housing sector should not shock anybody, given that we have seen such a high demand starting in May, definitely going up in June and July. Of course, data is lagging, but from what we've been listening and watching in July, we were doing still pretty okay in that area. Hours worked were up about 9% on annual basis. That is very interesting and not surprising as well, because if you really think about it, you have a business that might be conducting more or less work, but sometimes, whether you serve one customer in your store or 10 customers in your store, there's still certain things in your store that have to happen that take a lot of time, effort, and energy, and of course money as well. And so when you have to cut down on the number of employees, right, it makes sense that those employees that are still working have to actually work more. So this is a very interesting component to understand. Small businesses are looking for more loans, and they're not at a point where they can survive without them. There are shortages in supply chain. You can't get a lot of material because supply chain had closed in March and April, and they're backed up. So even when they have some demand, they can't get supplies to fuel the business and meet that demand. New business startups are almost 10% over the same time last year, and that's a sign that entrepreneurs are finding opportunities. And it's also a sign that many people are unemployed and they are getting creative as they should. So we always know that whenever we hit a recession, whenever we hit a downfall, we do see an uptick in bankruptcies. We do see an uptick in unemployment. We do see an uptick in new businesses being created. And this particular one is going to be very, very interesting one as well. My personal expectation is that we're going to see a lot of tech-based businesses, remote-based businesses, and I am also expecting there's going to be a lot of interesting things happening within financial sector as well as cryptocurrencies. I could be completely wrong, but that's kind of where I see some of the components, some of the businesses long term that we'll hear about that start emerging over the upcoming months and years are going to be based out of, and it's just kind of where I see it. Now, one of the other interesting pieces that I do want to share with you is when it comes to restaurants, where are we and what's going on in that sector? So there's a report coming out that basically saying that during the March and April, customer transactions dropped by more than 40%. And then by late March, 3% of restaurants in the US had already permanently closed. And that number, of course, has gone up severely since then. I don't know what the exact number is. I couldn't find information. If you do have it, let me know in the chat. Let me know in the comments, because I am very, very curious to learn about what's going on there. Customers returned to restaurants later in April, May, and June. However, results in July indicate improvement in sales experienced by the industry was short-lived. Transactions were down yet again, this time by 11%. From the bottom, about first week of April, we were seeing 5% to 8% increase every week until late June. Open Table data, which is the app where you can reserve the tables, for those of you who don't know that, showed similar stagnation in the number of seated diners from online phone and walk-in reservations. Peak was on June 21st, Father's Day, when diners were down just 41% compared to the year prior. In July, declines ranged from 40 to 72%. This is brutal and absolutely horrific whatsoever. Now, another piece that is very interesting, that what likely also is driving some of this desire to dine out or dine in or whatever, to dine, has to do with the fact that temperatures are up. In May and June, when it was really lovely to be outside, sitting outdoors having a meal made sense. Now, when the temperatures are 80 some 90 degrees or 100 some degrees in places like Arizona and New Mexico or Nevada, for example, and humidity might be in the 70, 80, 90%, you don't want to sit outside. You want to sit somewhere where there's air conditioning and it's much more comfortable. And so many restaurants are not offering that, whether they don't want to or the government doesn't allow them to do that, which is why we're seeing this severe drop. So I think restaurants are going to suffer even more through the month of August. I think it's going to be even worse, and it wouldn't surprise me if we see more of them close permanently, or at least temporarily do some furloughs, shut it down, and then potentially look to reopen if they can survive later in September when temperatures cool down. And then maybe October could be a goodish month for restaurants. And then by the time we hit November, depending on how cool or warm the fall is, we could see maybe early November, depending on the location, still be okay. And then by the middle of it, it's going to shut down if the virus and the pandemic don't go away. Because again, for the same reason that you don't want to sit outside when it's too hot, you also don't want to sit outside when it's too cold. And so I think we're going to see maybe a slowdown and maybe hopefully a little bit of a peak if restaurants survive, and then probably right back on down. And I think winter, whatever didn't kill off the businesses in spring, and whatever the summer doesn't end up killing, winter will definitely end up taking away. And that's a very sad proposition of kind of where we are. But again, a lot of things can change between now and winter, but pending things don't change majorly within the laws, within the health, within the pandemic. That's kind of where I see it going. Let me know what you think. Now, the additional piece, of course, is the loss of the extra $600 in unemployment benefits, which further will, they're saying could, but I'm saying it will hurt the sales. Because if people have less money, then they can spend less, right? So it creates a bigger problem. The unemployment benefits translated to between 15 to 18 billion dollars per week being put into consumers' bank accounts, which means restaurants, gas stations, grocery stores, clothing, online sales. Think about subscriptions, all kinds of different things. All of that is gone right now. It's we don't know if it's going to come back. Right now, it's not back. So that means that just in a week from the 25th through the 31st, we have lost from the consumer spending component between 15 and 18 billion dollars. This week is going to be additional one. So basically, by the time Saturday hits in a couple of days, we are down in ability to consume about 30 to 36 billion dollars. We are going to see massive, massive, massive downfall when it comes to businesses and sales, if we haven't already. So do watch out for news about that stuff to start coming out. And of course, as it does, we're going to actually look at the data and look at what exactly does that mean. I don't think we're going to see anything close to the rapid recovery we were seeing, Davey said. I think we're going to be a much more conservative recovery, and I think it's going to be a much more challenging recovery, especially if the businesses can't get additional loans. Let's call them grants, because that's what they need to be. Because if a business borrows money now and is paying stuff, but is expected to be paying off that loan over the fall and winter months, good luck. Not going to happen, for the exact reason that we just talked about. And now I do want to take a look at some of the charts that is coming out of Federal Reserve St. Louis. So there's a couple of different charts that I wanted to take a look at. First one that I want to look at is the Industrial Production Index. I think this is very important. You will see that I have kind of shortened the chart over here to kind of start from early 2000s. You will see that we had a little bit of a recession in early 2000. If you remember, that was the dot-com bust. Since then, the industrial production has gone up, but then we hit the 2008 challenge with the mortgages and CDOs and that kind of stuff, implosion, and we've gone down to super low levels that we haven't seen ever before. Since then, we had recovered, right? Over here by 2014, we kind of hit similar time from 2007 and have gone up into 2019. Then we kind of went down sideways, and then we've hit another slump, however, not as deep as the 2008, 2009. And since then, we have seen a bit of an uptick, which is actually quite lovely. The part that scares me, to be completely honest with you, is you see this thing right over here where my mouse is, where we've seen this sort of a giant dive. Then we saw a small uptick. You see that? I'm going to move my mouse right now so you can see kind of how it goes down. Then it sort of did a little bit of an uptick, and then boom, it went down. That is what I think. Again, my crystal ball broke years ago. I tell you that just about every single day, because I don't know exactly how things are going to play out. But I look at that stuff. I look at all of the news. I look at what's going on, and it wouldn't surprise me if the industrial production, you see this uptick right now, and then boom, when we see another leg. If we were to follow this, let me zoom back out. Whoa, no. What I was trying to do is something like this. Okay, so this is the 2008, and you can just see a small thing right there in the middle of it that it almost looks sideways, like right, it goes down, it kind of has a little bit of a sideways and it goes down. If that is the case, that is going to happen. It would not surprise me if the industrial production index actually goes down to, like, high 70s, low 80s, high 70s, even as low as, low 70s, high 60s. So that basically brings us down to the production level that we had, I don't know, in late 1990s. Again, I could be wrong, but I am just looking. Okay, let me see if we could get this over here. I am just looking at this little bit of a, uptick similar to here, and then another leg that is just as deep. So if we take this and we take it down another one, excuse me, that one, wow, all kinds of things happen when things are live and you can't edit. But when I take this, right, and I take it another leg down, I do come to about mid 70s, and if it gets really, really bad, it could get a little bit lower, which is why I have said what I said. So that's going to be a piece to really watch out. Obviously, we're not going to be able to get a prediction on it. We can only look backwards and see kind of where things are. So here is the real gross domestic product. We've seen this chart in a few different areas, but we haven't looked at it on the Fed side at all. As you can see, this is kind of where we are. Steeper than the steep, which is what makes me believe that the little bit of an uptick in production is just a short-lived, and then we're going to take a nosedive yet again because of what I'm seeing here. Here is the 2008, and you saw how deeply it cut, and so that's the piece where I'm saying it could even hit the 60s, if not even lower, which, goodness gracious, I hope not. But anything is possible at all. So now I do want to take a look at the money supply. So the money supply, as you can see, it has been steadily going up, and now we see this beautiful kind of uptick. Now I call it beautiful just because it's a very clear uptick. It's not like this one over here where it's slight little bumps in the road that you see, but it's definitely an uptick. But it is sort of starting to wean off and slow down, although as we hit some of the additional challenges that I have already mentioned to you, and we see some of the additional problems with more bankruptcies, more people struggling, potentially more riots coming in now for food and or the lack thereof, and the lack of homes and that kind of stuff. When we see that stuff, I can see that puppy going through the roof. So what you're seeing here right now, hold on, pause for a second, just take a look at the chart, please. I had to turn the fan in full transparency as to what just happened. Then I could see this definitely going up and seeing yet another uptick for sure. Here we do have consumer price index for all urban areas. As you can see, I kind of shortened it to start from the mid 2000s, roughly late 2000s. And as you can see, the consumer price index have been steadily going up, up, up. We've hit the high in, what is this, February. Then we've come down. But look at this. We're seeing another sort of uptick coming in. If we actually zoom out, look at this thing. Look at how high this thing goes. So it is typical that you see a small little bit of a blimp down in the recessions, and I would argue that we're not in recession right now. I would argue that we are in a depression. I've been saying that for a little while. I'm still sticking to that. I'm hearing more and more people talk about it now, but I'm sticking with the fact that we are in a depression. It's just that they're not calling it that quite yet. And if we zoom in a little bit into these gray zones, you will see that every time we kind of hit it, there's a little bit of either a downtick or sideways or a pause or something like that. So it's normal, which is what we're experiencing, but then it picks right back on up. And that's kind of where I'm thinking we might actually end. So you can see right here in the 2000s, in the 2008, similar thing happened. And now if we just kind of zoom in, you will see that we've gone down sort of sideways and then back on up. And so now I do believe that we are going to see the increase in the price index, basically that inflation is starting to kind of pick up. And we do have some news, so hold on, hang on to your hats and your chairs and your coffee mugs, because there's news coming about that as well. Velocity of money supply, this is the rough one. This is the how fast the money is moving. And as you can see, it's, I mean, we just took a nosedive. And so right now I'm actually going to zoom in closer over here so that we can really see what's been going on. And here's, 2017, 2018, 2019, and then boom, we are down. What is this? 1.1, right? Is that kind of what you're seeing as well? But if we were to zoom out from the 60s, you can see kind of how the velocity really picked up in the 90s. And we've been steadily going down with a super deep nosedive right now. And that basically means that money is not changing hands. The reason is that those that have a little bit are trying to hold on to it for a dear life. Those that have a lot are not sending it out. They're waiting. They might be participating in some of the market moves, making money, getting assets, buying assets right now, probably at much cheaper than they could have otherwise. And then they're sitting on cash, waiting for the catastrophic next leg down to then basically go in and buy stuff. So we're not seeing movements happening at all whatsoever. And even with this sort of jumping down, we're seeing that the consumer price is going up. And we're also seeing news from the Fed. The Fed is expected to make major commitment to ramping up inflation soon. And here we go, Mr. J. Powell. And basically they're saying that they are they're coming up with a plan of what they're going to do, of how they're going to basically keep on targeting that 2%. And they're now even saying that 2 to 4% would be even better for the inflation piece to kind of happen. And they want this to happen. They are now saying that inflation is now closer to 1%, whereas we were much lower prior to that. So this is an interesting piece right here for you to remember, that we are hitting about 1% or so, but it's very, very slow. And with money velocity going lower than ever before, that's not going to happen as quickly. So they're doing what they can and what they're thinking they can. But I think this now with the slowdown in the stimulus and everything else, I think it's going to show that the inflation rate is going to come right back down in many sectors, not in everything, right? Consumer price basically means like the food products and that kind of stuff. I think that is going to continue to go up, but some of the other components that are measured likely to go back down. And at that point, I think that as the money starts actually hitting the consumers, which it should if they're really wanting to change and influence the inflation rate, then we could see the money velocity start to pick up. We can see inflation pick up, and then we can see potentially us overshooting the 2%. But as the report is saying, as the news is saying right over here, that they're saying it's going to be a very, very slow process whatsoever, and it's going to take years before it does. And we are basically saying that here is the piece that I wanted to share with you. We believe that the Fed publicly would welcome inflation in a range of 2 up to 4% as a long overdue offset of inflation running below 2% for so long in the past. And that's coming out of Yardeni research. So that's kind of where it's going on. Now, of course, they're saying that they're going to keep the rates as low as we have them, right, at 0% until we hit that 2 to 4% rate. So we'll see kind of how that happens, when that happens, if that happens. Right now, investors are heavily betting on inflation hedges, so to speak, which is gold, silver. then a lot of people are shorting dollar, and the dollar has seen a weakening in as compared to the basket of other currencies, as you know, and a lot of people are rushing into tips, which is the Treasury inflation protected securities. And so we've seen quite a bit of money going into those assets. And of course, you likely have heard that gold again is flirting with the 2000 level, potentially and very likely to overtake it. My prediction is in month of August, but I could be wrong. And you know what? I am actually going to take a quick look right now just because I am curious. And wow, yeah, we're actually over 2000 in gold. So 2041 in spot price of gold. We have officially broken the 2000 level. So if you remember, just yesterday we were at 1970 something. We're at 2041 right now. Silver at 26. Gold to silver ratio dropped down from the 81 down to 75.9. And I do expect that this is going to continue dropping, which means silver is going to hit well over $30. And I expect that to happen over the upcoming days, maybe a couple weeks at most, but definitely happening in month of August. Again, I could be wrong, not a financial advice, but that's just kind of where I see this happening. Wow, I did not expect that we're going to hit 2041 already. Like I said, I was expecting that we're going to hit over 2000 in this month, but I wasn't expecting that it's going to be today. So I am glad that I was curious enough to quickly take a look at what's going on and to quickly update you on this particular piece as to what's going on with the whole market. Quickly talking about satisfying my curiosities before we end with some of additional news, is I do want to share with you. I was curious again to see where the cryptos are, and right now, as you can see, Bitcoin is at 11.4. Ethereum is approaching 400, and I do expect that Ethereum is going to be well above $400 in short order. So we will have additional crypto news coming your way in the upcoming days. But in case you don't know and you are curious, ETH 2.0 testnet has launched. It is official, so congratulations to the ETH community. This is very, very exciting for me personally, that this is what's happening, and then this is kind of where we are. And finally, what I wanted to share with you is a bit of a news around the world as to how different countries, different locations are all dealing with COVID. And as you know, there's been arguments about face mask, no face mask. Do you have to wear it? Do you not have to wear it? And here we go. We have a bit of a news happening right here. See, what's going on with the stuff and how are folks approaching it. And, here we go. The UK government held the line that the evidence on effectiveness of masks in controlling COVID-19 was weak. World Health Organization senior health officials argued that routinely wearing a mask was not only useless but could make matters worse. In June, the World Health Organization amended its advice to say face masks were advisable in situations where social distancing was impossible. And then, of course, the UK government made regulatory wear masks on trains, tubes, buses. And, then since then, it started to kind of expand. And whether to wear a mask or not has become now entwined with the wider culture wars. And, some are basically saying if you wear it, you're being good and protecting the health of yourself. And others are saying not wearing a mask makes you a rebel and you are defiant and you're making your own decision. So as you can see, it's getting all over the place. And this is not just in UK, it's everywhere. So now we're seeing that face coverings are being asked to be, happening in stores, shops, all over the place. So similar thing happening in U.S. In Spain, many regions demand that everyone wears a mask anywhere outside their own homes. U.S. is now coming with the news that even in spite of being able to close your front door, take off your mask might be taken away. Dr. Deborah Birx, the White House Coronavirus Task Force co-coordinator, has warned that the rise in positive tests marks a new phase of the pandemic and has added, if you're a multi-generation household and there's an outbreak in your rural area or your city, you need to really consider wearing a mask at home, assuming you have individuals in your home with comor- comorbidities. I don't know what that word is. I'm gonna have to look it up for sure. But basically, now that there's news coming in that folks are being asked to wear the mask when inside of the home, and so this was an interesting piece that is kind of happening here. Now, of course, now we have the news from Netherlands. Netherlands has taken a different. It's interesting that they're always. I have to comment on this. They're always. It's exactly same shot, same pier, same. Three people on the beach, same little tugboat thing going on. I mean, find a new photo. That's all I'm gonna say. So it's interesting how we're like recycling the same stuff. The Netherlands has taken a different approach. In keeping with the WHO's advice, wearing a face mask on public transportation is mandatory, but everywhere else, they're basically saying, don't worry about it. Do your thing and just keep afar from everybody else. So that's kind of what we have for the news over here. But it doesn't end there. Then we jump into UK, and UK is coming up with a new idea of how to prevent the spread of COVID. So the face mask was one thing, but now there's something different happening. I know you're thinking, why in the world is he giving us a construction site when talking about COVID? Hint, hint. They are basically saying if things get really tough with COVID 19, local councils in the UK could order a demolition of coronavirus contaminated homes. Its strategy is to contain the disease, suggests some overkill measures, such as destroying working vehicles and entire buildings, which the readers of the British media have discovered this week. So, British media basically is reporting that there is a law on the books that allows the local governments to call it and basically say, it's really, really bad, and now we're going to actually destroy your car, destroy your restaurant, destroy your home if we are found that your home actually has a strong case of virus. So this is an interesting approach, but it doesn't end there. We do have even more interesting news when it comes to the coronavirus that is coming out of Australia. Yes, we're going to jump the pond, a couple of ponds yet again, and we're going to go straight into Australia. And here you go, beautiful photo of Melbourne with people going out for a walk with the face mask. And there is a reason for that, because they have seen a bit of an uptick on what's going on in Melbourne. And it's not, comparing with other places and what's going on, it's nowhere near, even adjusted for population, it's nowhere near. But they are taking some very drastic measures. So let's read on it. Australia's second largest city is now subject to some of the most extraordinary COVID-19 lockdown measures on planet. A total of 147 have lost their lives due to coronavirus in Victoria, and making this area about 232 deaths in total. However, internationally, these are vanishingly small numbers. Now, what is happening? An uptick prompted Andrews, who is the Prime Minister, I believe. What is he? Hold on. What is he? He is Premier. Sorry, not Prime. Premier in Australia. Uptick prompted Andrews to impose the kinds of restrictions on the lives of 5 million people in Melbourne that would have looked harsh in 1950s East Berlin. Six-week curfew from 8 p.m. to 5 a.m. The only reason to leave your home are shopping for food, essential items, caregiving, care and caregiving, and daily exercise and work. Daily exercise can only take place within 5 kilometers radius of your home, cannot last longer than an hour, and can't be with more than one other person. 5 kilometers, I think it's going to make it about 2.5 miles of a radius from your home. You cannot buy more than 2 units of certain essential items, including dairy, meat, vegetables, fish, and toilet paper. And masks are compulsory when outdoors. But it doesn't end there, because if you thought that this was bad, it doesn't end there. There is an additional piece coming to all of the residents in Melbourne, Australia. Now, police officers can enter homes with a neither warrant nor permission, and they can actually go and do that stuff to basically make sure that you are following orders and that you are staying at home. So, talk about a home prison sentence. That's right. Melbourne has been upgraded from state of emergency to state of disaster, which gives authority to the local government and of course the police and the force and all of that stuff that gives them a right to go in. Now, of course, with the new lockdown, we are actually seeing again lines of people getting into the stores and waiting. And this individual over here is not wearing a mask, so I hope that the authorities don't see it and arrest him. Of course, I'm semi joking, but no, not really. Here is what the statement from the state commandant, the Premier Andrews, as he's bringing news restrictions to told Victorians. There is literally no reason for you to leave your home, and if you were to leave your home and not be found there, you will have a very difficult time convincing Victoria Police that you have a lawful reason. So there you go, folks. No matter where you are, you can see that craziness is happening everywhere. So even if you're being asked to stay at home, even if you do have curfews, even if you can't dine outside, as long as the police, I guess, can't enter your home to tuck you in the bed, then make sure you're there. You are doing just fine. We will see kind of how this develops and stuff. I do have some audience members that are from Australia. So, hey, if you are from Australia and you are actually living in Victoria and you do understand what's going on over there, hit me up. Let me know. I am very, very curious. And I know that the rest of the individuals watching the news are equally as curious as to what's going on. So there you go. That's going to do it for today's news and updates only on onedealaway.com. I think that the news from Australia alone deserve a little bit of a thumbs up. So smash that button right now if you're watching it on YouTube. If you're watching this live, we're going to go into the Q&A chat session right in a second. Thank you very much for watching. I will see you tomorrow. Until then, stay forever money blessed. And do remember, you are only one deal away.